Welcome back to Morning Markets from True Potential. Paul Durrant, Investment Director. If we start by looking at last week's returns from global equities, we saw good returns across the major regions. Starting with European equities, we saw sentiment boosts as Putin came out with the potential for troops to be pulled out of northern cities such as Kiev. That didn't come through. Shelling continues, unfortunately, but European equities were positive for the week. US equities were positive marginally, but here in the UK, equity returns were very positive again, outperforming, and that puts the FTSE 100 up 1.5% for the quarter, and just shows you that even in times of high volatility, and despite the unfortunate situation taking place in Ukraine, good returns can be had from equities in certain pockets. If we turn to economic data, there was some interesting data coming out of the US on Friday on the jobs front and in terms of wages. Really important because it gives us a really good indication of the strength of the US economy and also whether the US Central Bank, the Federal Reserve, have got the level of interest rates at the right level in order to maintain their dual mandate of keeping price stability and maximising employment. What we saw is, in terms of the jobs added, was 431,000 jobs added in March. Also, interestingly, that the number of jobs added in February were actually revised higher by 72,000. So really good, strong numbers coming out from the US. If we look at the unemployment rate here in the chart, we can see unemployment fell from 3.8% in February to 3.6% in March. This is getting towards the level pre-pandemic in February 2020 of 3.5%. So we're seeing excellent labour market conditions in the US. What's also interesting is that we're seeing more people enter the labour force or looking for jobs within the US market. So we look at the labour force participation rate, that's at 62.4, increased by from 62.3%. And that means that looking back on last year when individuals received checks from the government, they were disincentivized to get into a job. That's now changing because inflation is now high at 7.9% year on year in the US, and therefore, in order to maintain a reasonable standard of living, they're having to look for jobs. Good for them because the labour market is very healthy. Companies are wanting workers. There's a labour shortage. There's 11.3 million vacancies available in the US market. That's about 1.8 for every person unemployed. In terms of wages, wages also increased up 0.4% over the month. That's a year-on-year rate of 5.8%. So wages are increasing to help workers cope in an environment where inflation is very high. All this puts extra pressure on policymakers, in particular the Federal Reserve, to get the level of interest rates right. We expect interest rates to continue to be pushed higher in the US in order to help cool the US economy and bring down consumption and bring down prices, but importantly try and keep the labour market in strong health. That's everything from us today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.